We have been having a good couple of days here. I hope you stick around, join us for a wrap-up session that's coming up next. I'm Chad King. I'm the Executive Director for Sustainability at DU, and I'm very excited about this presentation. I think it should raise some great questions for us. I'd like to introduce Dr. Chris Hughen, who's CFA. He's an Associate Professor of Finance and the Co-Director of the Marsico Investment Center at DU. He holds the Fundamentals of Sustainability Accounting certification and teaches a class that manages part of the DU endowment with the sustainability strategy. And as a fun fact, I like this one. I'm not sure if it speaks to investing, cars, or bikes, but one of Chris's life goals is to always have a mountain bike worth more than his car. I'm going to turn it over to Chris.
Thank you, Chad and Emily. I really appreciate you organizing this event. It's a real honor to speak to you all. I mean, I get chills when I walk around campus and see all the solar cells and the new projects going on. It's really amazing to see how much has been done to push sustainability forward on the DU campus. So it's awesome. And just to add to the sustainability theme, I'm rocking the climate stripes right here. And I think most times when I talk and present, nobody has any idea what those colored stripes are. I'm hoping that people in this crowd actually do know what those stripes are. But if there are any questions, I hope that you'll throw something in chat. I encourage you to actually interrupt me as I talk about some of the things that I'm going to present today, and I'd prefer it if you actually interrupted me. So please jump in if there's anything I can elaborate on or anything that you have any questions on. So again, my name is Chris, and I work in the Daniels College of Business. I'm going to share my screen, and I want to talk a bit about a couple of the classes that I teach and some of the research that I'm doing as well on sustainability and bringing that into the financial marketplace. I'll first start off by talking about a student-managed investment fund that we have in the Daniels College of Business, and it's called the Reiman Fund. We have a particular strategy for the Reiman Fund, and it's a little bit unusual. We've actually published a couple papers about the strategy and how we've done something unusual in order to enhance the educational value of students managing a small part of the endowment fund. But one of the aspects that we're doing is shown in the second bullet point here. We are trying to identify companies that have superior performance on the material sustainability issues for that particular industry. And one of the messages that I have for you all today, which you probably already know, is that when it comes to investing, and what we're doing in this particular fund is we're managing a equity fund, meaning we're picking stocks to outperform an index or a benchmark. One of the challenges of doing this is you're often just overwhelmed with information. And unfortunately, the information that you do have is often bad and not the information that you want. And the other issue is that no company is perfect when we try to pick an investment in our stock portfolio. I can find flaws in all companies, and it's really a situation where we're trying to figure out where to weigh the pluses and minuses of the company, and not only invest in companies that have sustainability as one of their values, but sustainability in the areas that matter the most. The class really is not about picking stocks, because very few of our graduates are going to go out and manage money and pick stocks or be equity analysts. But what they're going to be doing is they're going to be working for companies, and those companies are going to need risk management tools. And for us in the Daniels College of Business, it's important for us to be able to help students better develop their skills for identifying what is really key for that industry, what are the key metrics to perform well on, to be attractive for investors, but also to be doing good for the society and for their businesses. So this is our strategy, and it's that real second bullet point that we're focusing on that we struggle with. And one of the reasons why we struggle with it is because we have a mid-cap strategy where we invest in mid-sized companies, and they have just very little information on it. Let me give you two charts to sort of motivate this. One of the reasons why this is very important in terms of valuation is because over decades, the US economy has transitioned. Most big companies, their value comes from intangible assets, things like copyrights, patents, intellectual property, or brands, and very little of it comes from tangible assets like property, plant, and equipment. And what this means is these companies are very sensitive to these sustainability issues. How do we evaluate companies? Well, surely many of you know the ESG acronym, which is environmental, social, and governance data. And if you look over time, there's plenty of information that the financial markets are generating with regard to ESG data, but the situation is most of it is not very good. I mean, the data has exploded. I'm old enough to think that 2007 is not that long ago, but you can see this is, it's almost like a hockey stick in some sense. The issue is the data is not very useful that we get for trying to manage stocks. And so a lot of it is the company, does it have a policy? And it's a checkbox. Or they have something that is just a 1 or a 0 in terms of, have they said this is important? What really we would like to have is hard data, numeric data, quantitative data that allows us to compare a company to its peers and decide what is the best in class for a company. And we're very challenged to find this for the mid-sized companies that we include in our portfolio. But that's the real beauty of this, is that we want to challenge, we want to make it tough so that our students are better able to do this in the marketplace. And so I became certified in sustainability accounting to help this process out. And I've been involved in an organization called SASB. And SASB has a unique way of measuring sustainability. They have 5 dimensions as opposed to sort of the 3 dimensions that ESG has. They have the environment, of course, which is one of the critical ones, but they break the social part into social capital and human capital. And they break the governance part, which is very common among investors, into business model innovation as well as leadership and governance. And so it's a little bit different framework, but the beauty of this is they have basically come out with what is material. And this phrase material is a key part of what we're focusing on. Material means that it's value relevant and it's important for the industry that you're looking at. And in fact, I've come up with an acronym that we use in our portfolio management. We make portfolio decisions, meaning we buy and sell stocks for the portfolio using music. And that is this management using material sustainability issues as well as controversies. And the reason why we've added this controversy of this is because there's so little data on some of the companies that we're trying to evaluate that we're looking for a proxy or a way to represent their performance on sustainability issues. And we have a service that provides data on the news items and things that the company is basically involved in. Are they in lawsuits, or the unions protesting, or are there other issues that are coming out that indicate that they're not doing good for the society and the economy, and as opposed to acting in a sustainable fashion. So I want to show you the famous paper about this. I'm just going to show you the best graph out of this. When we are examining material sustainability issues, studies have shown that these have high alpha. And for those of you who aren't used to investment analysis, alpha is like this great thing where you're outperforming and it indicates that something is value relevant. And those companies that perform well on material sustainability factors, they're having higher returns. And that's what you see in this red square, which shows that material items are really important. So I've talked vaguely about all this. What are these sustainability issues that we're trying to evaluate using a different framework, right, than the typical ESG. This is a circle that represents the sustainability issues that we primarily deal with. And we have spreadsheets that break this down to the actual metrics that the companies need to release on that we can compare to their peers. I don't think anybody would probably be surprised by these, but these have been determined to be value relevant in terms of portfolio management. So I'm going to give you like a quick quiz associated with this. And I wish I had a poll set up because I think that would do so much better. In our student managed investment fund, we don't own any oil and gas stocks, but I'm trying to pick an extreme example associated with this. In fact, we don't even own any utility stocks because we found that the utilities in the mid cap space are actually, they tend to also be producing oil and gas. But what would you consider to be material? In other words, like really important for an investor to know about if you were evaluating an oil and gas stock? And again, this is an extreme one. I don't know how many people would answer this correctly. Like it's not all of these that are the most prominent ones. Again, we're trying to focus on the biggest issues because we have limited time in order to analyze these companies. And so I hope you've got some of these in mind that you think are sort of important and maybe not. This is the answer. There are obviously a lot of environmental issues involved in oil and gas production. So investors are primarily concerned with GHG, which is the greenhouse gas emissions, and scope 1, scope 2 are of course the most prominent for those who are familiar with the Paris Climate Accord, but there are others as well. What you don't see much in here is the L, which is the leadership and governance, and the business model and innovation. Of course, oil and gas is going to go away, and that business model is not resilient, so that gets a yellow. Safety aspects are important. Social aspects in terms of community relations are also important, where they're putting the oil and gas wells. And again, we don't invest in oil and gas, but I'm trying to give you an extreme example in what we would do in terms of trying to evaluate a company if we were going to look at it. So, leadership and governance, I would argue, is more important than it is according to the SASB framework. But business ethics is the primary one that comes out. And I'll give you an example too that we have in our portfolio. We have a company called Chemours, which is in the material sector. And Chemours is a very controversial company, and we've had to weigh the situation about should we invest in this and should we not. What I want you to take away from this graph is the fact that Chemours produces a refrigerant that is basically the best in the business in terms of its GWP, which is that greenhouse global warming potential. They have this Opteon product, which we hope people will switch to because it has much less impact on the environment than what is typically used today. And so this is really a breakthrough product going forward to improving the greenhouse gas emissions and global warming. But the problem with this company is that when they were spun off from another company, they got the liabilities for PFASs. And they're being sued because they were tasked with this. They're being sued for environmental damage on products that they've never made. And that, is obviously a controversy. We've stayed invested in this company, even despite the fact that they're getting sued for environmental reasons. But that was really a legacy company that caused those environmental reasons as opposed to this particular company. And the beauty about what I do is I get to weigh these decisions with the students and try and grapple with what is important, what is not. Is this a good company or is it not? And the one that really has been challenging for us has been Chemours. But I think I'm going to pause right here and just say I've given you a quick and incorporate into the curriculum in the Daniels College of Business, and we're even trying to create some outside programs for local businesses along these issues as well. And I'd love to, take some questions associated with this, if anyone has any.
I've got questions.
Thank you, Chad.
I was going to type them, but I was taking too long. So I'll talk while other people type their questions. Um, so I find it fascinating, especially with what you all are looking at in terms of the parameters and getting a better understanding of like what's real and what's not in terms of what we should be looking at. I'm curious as to how you would compare the work of that you're doing around the fund to like can you use that work to speak at all to how the university invests its endowment? I know that this has been a big topic of, you know, that there's the whole divestment movement. There's students that have been very active on this on campus. And I'm just curious as to your thoughts as an expert, which I cannot claim to be an expert on any of this, in terms of how, you know, how do you compare the two? Like that's, and what recommendations might come out of your work, I guess.
Yeah, so that's a good point. And I wish I had information on the endowment fund. I have zero knowledge of what we're investing in terms of the overall endowment fund. But I can tell you where we've been taking this fund, and the beauty of some of the metrics that we're using to measure sustainability. We have been able to map them to the UN's SDGs, the Sustainable Development Goals, and the more data that we incorporate, the more we're able to, connect the stocks that we own and what we're investing in into just larger goals. And the SDGs, to me, are sort of the ultimate way to, measure what we're doing, and that to me adds a lot of value. And I wish I could speak to the endowment fund. I'm totally in the dark in terms of what they own and what they're investing in.
I guess I could rephrase. Would the approach that you're taking on this smaller chunk of fund, right? Would it translate? Like in a perfect world, could we be investing in or have a filter for at a, you know, an endowment scale investment that might work to keep our fund and make us feel good about where we're investing, I guess.
Yeah. So what's happened recently with particularly energy stocks is that they are such a small percentage of indexes now that they're not that important. If you go back 10 years ago, energy stocks used to be 10, 15% of the overall market. They were highly valued. And now, at least compared to our benchmark, they're 3%. And so from a portfolio manager perspective, you can underweight a particular sector. I know I'm using a little more technical terms, but you can underweight a sector by 3% and not really damage your overall performance. You don't even have to invest any in it, and you're not taking some extreme portfolio approach. And that has a lot to say about, where the financial markets have gone, because the growth is really with renewable, and we've seen that in 2020. I mean, the stock prices. So to me, the best argument too to convince people to shy away from the traditional energy companies towards the more renewable companies is that's where the growth is, that's where the investment is, that's where you're going to make the money. And to me, that's the argument that should resonate with anyone when you see what happened in 2020 and you see all the executive orders that have come down from the Biden administration. If you want to make money for the DU endowment fund, you better be heavily weighted in non-traditional energy companies, or you're going to miss out on the growth, the income, and the capital gains associated with that. To me, that's just a very clear argument, and one that I think that some of the traditional arguments don't use that. They say it's, just bad for the environment, bad for society, which is true, of course. But these days, I tend to take a more portfolio manager stake on this and say that's where the money is. And just in terms of, I know how to form a portfolio, and you can underweight that and without any issues. I hope that helps, Chad. I mean,
that's great, and it gave us time. We've got all sorts of questions coming in now.
Yeah, so definitely, there's not only in-house people doing evaluations for sustainability. One of our recent graduates got a job at Newmont, working in the sustainability field. And I'm really proud of her because she's been really passionate about it. And she works in their sustainability department at a mining company, which is obviously a very controversial one. But there's been increasing push to get outside people to verify this data. And what we've seen, in fact, I just reviewed a paper that was submitted to one of the top finance journals about the data that's coming from third parties, and the data is horrible, is basically the conclusion of this paper. They can't even measure the most basic, forecast the most basic greenhouse gas emissions data. And so the paper went on to argue that, because this is not working, when outside parties are trying to forecast, say, what Exxon or BP are actually putting out in greenhouse gases, that we have to make this mandatory, and it has to be audited by a third party outside. Otherwise, we're not going to be able to compare companies. So yeah, this is a huge push. I mean, I'm a chartered financial analyst, which is the premier designation for investment managers. And I mean, if you just go to the CFA website, the first thing you're going to see is investment managers, 80% of them are including these ESG factors now in investment valuation. So it really is very important.
Curious as to what you'd say too with Kate's question on, as an individual investor, or maybe potentially as someone who can control some things through the like as employees through TIA or other investments. What role can I play in influencing companies to prioritize sustainability in their business model?
Yeah, and maybe I'm not seeing the questions. I only see one from John, but yeah, so I think that the latest push is going to be, and this is something that I'm really would love to write a research paper on if I can get more time, is to try and better classify these investments, because there's a lot of really dirty funds out there that, they claim they're socially responsible, but what funds are doing in terms of claiming that is it's like night and day depending on the fund. And so there's coming down from the professional organizations more of a taxonomy for classifying these funds. And I think the TIAA-CREF ones are great. Those aren't the ones I'm really referring to. But I think often when you invest in a socially responsible fund, you have no idea what you're getting. And that's, to me, unacceptable. We have to tell these financial institutions, you are going to have to release more information and tell people so that they can pick investment products that fit with their preferences. So that we'll see tons of that happening in the next year or two.
Cool. And then there's one other these are popping up in that Q&A tab at the very bottom. But this one is, there's been a lot of criticism about how useful the SDGs have been beyond providing guiding principles. Do you think that the SDGs are driving changes in key sectors beyond organizations that were already working on the goals outlined?
That is a good question. Yeah, sorry, I was looking at the chat, not the question and answer. Yeah, so that is a good question, and I don't have great insight associated with that. I'm worried about the SDGs, but from me as someone who's looking at this from an investor standpoint, I'm very pragmatic about this, and I'm trying to figure out, is there something better? And if there's not something better, then I'm going to work with what I have that's the best I can get. And honestly, our anonymous attendee sounds like they're more of an expert on the SDGs than I am. I'm looking for somebody to tell me what's better, because I would love to map it and do a study and try and produce results associated with it. So yeah, and Cassidy, that last graph was for different companies, and like big was better for that Chemours graph, where it's going to have less GWP, which is that global warming potential for that. So sorry I missed your questions in the Q&A. All right, I'm out of time, but hey, I want to thank you, and anybody who wants to connect with me, feel free to send me an email. I'm really passionate about these issues and trying to bring this forward in our curriculum, and it's just been a great learning opportunity for me here at GU as we push the business curriculum forward to address these issues in a very meaningful way. So thanks, Chad and Emily, for having me involved.
Thank you. This was great, really informative. And yeah, I encourage everybody to jump into the last session as we wrap this conference up.